Canada's game plan on oil exports amid tariff talks. Canada's oil exports have always been a major player in the global energy market, but with tariff talks heating up, things are getting more complicated than ever. As one of the world's largest oil producers, Canada's economy heavily depends on energy exports, particularly to its biggest customer, the United States. However, with shifting trade policies, increasing global competition, and environmental concerns putting pressure on the industry, Canada is strategizing its next move. Will it expand exports to new markets, negotiate better trade deals, or face the reality of shrinking demand for fossil fuels? Today, we're diving deep into Canada's game plan for oil exports and what it means to the economy, trade relations, and the future of energy. The current state of Canada's oil exports. Canada is the fourth largest oil producer in the world, with a vast majority of its crude oil coming from the Alberta oil sands. About 80 to 85% of Canada's oil exports go directly to the United States, making it one of the most energy-dependent trade relationships in the world. However, recent tariff discussions and trade disputes have put this partnership under strain. The U.S. has been pushing for energy independence, increasing domestic production, and even imposing tariffs on foreign oil in some cases. While Canada has long benefited from preferential trade agreements like USMCA, United States-Mexico-Canada Agreement, the threat of higher tariffs or restricted access to the U.S. market has forced Canada to rethink its strategy. The country has been actively looking to diversify its oil exports, with ambitions to ship more crude to Asia and Europe. The Trans Mountain Pipeline expansion, which was completed after years of political and legal battles, is expected to increase Canada's export capacity to the Pacific coast, giving access to Asian markets like China, Japan, and South Korea. However, diversifying away from the U.S. isn't easy. Geopolitical tensions, environmental policies, and competition from Middle Eastern oil producers make it a tough road ahead. Challenges in trade negotiations. Even as Canada explores new markets, it faces a series of challenges that complicate its oil export strategy. First, there's the issue of carbon policies and environmental regulations. Canada has pledged to reduce carbon emissions and meet its climate commitments under the Paris Agreement, making it difficult to expand fossil fuel exports without facing backlash. Additionally, many countries, including those in Europe, are moving away from oil and investing in renewable energy, raising concerns about the long-term demand for Canadian crude. Another challenge is the cost of production. Extracting oil from the Alberta oil sands is expensive, and when global oil prices drop, Canada's oil becomes less competitive compared to cheaper options from countries like Saudi Arabia and Russia. On top of that, Canada's existing pipeline capacity issues mean that even when demand is high, bottlenecks and transportation limits can slow down exports. This is why the LNG, liquefied natural gas, market has also become part of Canada's energy strategy, hoping to tap into natural gas exports as a more environmentally friendly alternative. Meanwhile, trade negotiations continue as Canada seeks fair tariff agreements with the U.S. and favorable trade terms with new partners. The government is working to secure long-term contracts with Asian countries while ensuring that domestic producers remain competitive in the global market. The future of Canada's oil exports. So, what's the future of Canada's oil exports? Well, it's a balancing act between economic growth and environmental responsibility. Canada is likely to keep strengthening its U.S. trade ties despite tariff concerns, because the U.S. remains its biggest and most reliable buyer. However, expanding export to Asia and Europe is still a key goal, especially as global energy demand shift away from traditional markets. The rise of electric vehicles, EVs, renewable energy, and carbon taxes will eventually lead to lower oil consumption, forcing Canada to adapt its strategy. The government is expected to support both the oil industry and clean energy investments, creating a hybrid energy future where Canada remains a major player in the energy sector, but with a stronger focus on sustainability. Whether Canada succeeds in Navigating these trade disputes and market shifts will depend on how well it balances its economic interests with its climate commitments. But one thing is certain, oil will continue to be a key part of Canada's economy, at least for the foreseeable future. Canada's game plan on oil exports amid tariff talks. Canada's oil industry has long been a pillar of its economy, driving billions of dollars in revenue and providing thousands of jobs across the country. However, with growing global uncertainties, trade tensions, and tariff talks heating up, Canada finds itself in a tough spot. The country's oil exports are heavily dependent on the United States, which imports the vast majority of Canadian crude. But as the U.S. shifts towards energy independence and explores new trade policies, Canada faces a challenge of protecting its oil sector while also diversifying its export markets. To add to the complexity, Canada is balancing these economic priorities with environmental commitments, making it harder to simply expand fossil fuel production. With pipeline projects, global trade negotiations, and the transition to cleaner energy sources all playing a role, Canada's strategy must be well-planned and forward-thinking to ensure long-term stability in the oil sector. One of the biggest challenges for Canada's oil exports is tariff uncertainty. Over the years, Canada has benefited from strong trade agreements with the U.S., particularly under USMCA, United States-Mexico-Canada Agreement. However, recent tariff discussions and trade disputes have raised concerns about the future of oil exports to the U.S. If tariffs on Canadian crude were to increase, it could severely impact pricing and competitiveness, making it harder for Canadian producers to sell their oil profitably. To counter this, Canada has been actively working to expand its export markets beyond the U.S., particularly in Asia and Europe. The Trans Mountain Pipeline expansion, which was completed after years of legal and political battles, is a key part of this strategy. By increasing pipeline capacity to the Pacific coast, Canada can now export more oil to countries like China, India, Japan, and South Korea, reducing its dependence on U.S. buyers. However, entering these new markets isn't as simple as just shipping the oil. Competition from Middle Eastern oil producers, fluctuating global prices, and geopolitical tensions make a complex and challenging endeavor. In addition to trade uncertainties, Canada's oil industry faces another major obstacle: environmental policies and the global shift toward renewable energy. Many countries, especially in Europe, are cutting back on fossil fuel imports and investing heavily in clean energy alternatives. Canada itself is committed to reducing carbon emissions and achieving net zero targets in the coming decades, which makes it difficult to justify expanding oil exports while also pushing for climate action. This contradiction has sparked intense debates within Canada, with pro-industry groups arguing for economic stability and job protection, while environmental activists push for stricter regulations and a transition to green energy. Some experts believe Canada should focus more on exporting liquefied natural gas (LNG), which is seen as a cleaner alternative to oil and has growing demand in Asian markets. While this shift could provide economic opportunities, the reality is that oil remains a highly profitable resource, and abandoning it too quickly could hurt Canada's economic growth and energy security. Looking ahead, the future of Canada's oil exports will depend on how well the country navigates these trade and policy challenges. The government is expected to continue negotiating favorable trade deals while also investing in cleaner energy projects to create a balanced energy strategy. The oil industry itself is also evolving, with companies investing in carbon capture technology, lower emission production methods, and hybrid energy models that allow them to remain competitive while adapting to global trends. One thing is clear: Canada cannot afford to rely solely on the U.S. market anymore, nor can it ignore the growing push for sustainable energy. It must adapt, innovate, and strategically expand its energy sector to stay ahead in a rapidly changing global economy. The coming years will be crucial in determining whether Canada remains a dominant oil exporter or transitions into a more diversified energy economy. So, what do you think? Can Canada successfully diversify its oil exports and overcome trade challenges? Or will tariffs and environmental concerns slow down its energy sector? Let us know in the comments. And don't forget to like, share, and subscribe for more deep dives into the biggest economic and geopolitical issues.